Hello traders and welcome to another video review. Today is Wednesday, December 17th, 2025. Let's take a look at the economic calendar for today. What do we have here? Data from Japan mostly beats the expectations. Exports 6.1%, trade balance 322 billion yen, and adjusted trade balance 0.06 trillion yen. CPI data from the UK. CPI lower than the expected forecast of 3.5% and lower than the previous number, and it's only actually 3.2% on the yearly measure, minus 0.2% worse than expected as well. PPI input up from 0 to 0.3%. At 10 o'clock, we got scheduled for release German business expectations, current assessment, and IFO business climate index. Very important data from Germany. CPI data from the Eurozone is scheduled for release at 11 o'clock. The market participants expect the CPI to stay at the level of 2.2%. CBI industrial trade orders from the UK scheduled for release at noon. Global daily trade price index from New Zealand is scheduled for release at 1 o'clock. Fed Weller will give a speech at 2:15, and 15 minutes later, Virgin Securities purchases from Canada are scheduled for release together with the that's not this. FOMC member Williams will give a speech 3:05, and then we have business inventories and retail inventories excluding autos from the USA. 30 minutes later, we got crude oil inventories scheduled for release at 4:30. The FOMC member Bostic will give a speech 6:30. 20-year bond auction will take place at 7 o'clock, and GDP data from New Zealand are scheduled for release at 11:15. So that's about today. So without any further ado, let's switch to the charts. We start with euro dollar. So the euro dollar started at the level of 1.1805. Big bearish engulfing pattern was made here, and now the market is moving lower towards the trend line support, right? So we seen the breakout first from the triangle, then bearish engulfing pattern, shooting star-ish pattern as well, and then movement to the downside. This level here will now act as the technical resistance, 1.1728, and now we are testing the support at 1.1707. Bearish engulfing pattern, bearish divergence between what is price doing and what is momentum doing. Beautiful signal for the short, and the movement, as you can see, is quite strong. The market keeps moving lower in that situation. So that's the current situation. Lower 42 points only on the RSI. There is plenty of room to the downside for the bears to push. There's plenty of room to the downside here on the chart. So reversal, short-term reversal on the euro dollar. Big reversal on the cable as well. Local high was made at the level of 1.3455. So this is the technical resistance, just below the key technical resistance, long-term technical resistance at 1.3423. Now we are digging even lower. Big sell-off of the cable. This movement to the downside is bigger than 0.73, 0.71, I guess, but let me just check it. It looks bigger. So let me just move it. There you go. minus 1.05, so minus 1 point almost 10 right now. So definitely this situation here is much more bearish than it was before, because these corrections here were almost the same. So the market keeps moving higher. Now we have a pure reversal here, and the biggest correction to the downside than it was before during the uptrend. So we have overbalance of price and time, at least price, maybe time not, but we have the overbalance of price Next target 100 periods moving average 1.3295, and the technical support at 1.3286, 1.3274. Momentum negative, below the level of 50, 37 points only. Reversal on the British pound. US dollar versus the Japanese yen, reversal to the upside. Momentum breaking above the level of 50. Right now is on the level of 55 points. So please be aware of the situation that we might test 100 piece moving average at 155.73 and even go higher towards the level of 156.60. So we are still moving inside of this channel. Nevertheless, it looks like the market wants to move somewhere above the 100 piece moving average, and look at this technical support. Now let me just mark this situation here with the rectangle. Where is my rectangle? There you go. I want to mark it with my rectangle tool, because it looks like this zone here was tested 1, 2, 3, 4, 5, 6, 7 times already. So right now let me just mark it as the demand zone. There will be nothing wrong with this. I need maybe some kind of a stronger. Okay, that will be fine. It's not that important. It's just important that we see this situation here. So that's the demand zone, right? So this is the zone that prevents US dollar versus the Japanese yen to fall even lower. Looking good, looking nice. More to come. It looks like the market still wants to move inside of this channel. US dollar index is worth of taking a look, because because of this situation here. Obviously we broke below this very important technical support that was apparently visible on the daily time frame chart. Let me just zoom in. All right, so that's the major one, obviously, around the level of 137. That was the technical support. There was one here, but that was violated, but we have a hammer at the end of this move. Right, so now the market is trying to catch up to the upside. On a daily, there is important technical, moving average 98.60 that might prevent further movement to the upside. But on the 4-hour time frame chart, we are just testing this zone, this very, very interesting zone here on the US dollar index. Let me just place the rectangle arrow, rectangle pattern here as well. So we got this rectangle pattern obviously moved towards the correct levels. So you can see that this is quite strong supply zone and we are just entering it. So we need to break above the zone and head towards 100 piece moving average and then 99.29 in order to see something more bullish. There is some kind of a trend line here on this chart as well. We can place this trend line, I think somewhere like this would be almost perfect. So now the market is below this trend line. Nevertheless, it looks like we might see some sort of the test of this trend line as well. So breakout above the trend line, breakout above the supply zone, breakout above the 100 piece moving average. It's all bullish, especially with this skyrocketing momentum. There is bullish engulfing, there is bullish divergence between what is price doing and what is the momentum doing. So that's another bullish case for the US dollar index. And let's take a look what gold is doing. If the market, if the US dollar is going up, gold doesn't do anything, keeps consolidating the recent gains around 4,320, very, very close to the all-time high, because we trade at just below the level of 4,353. So that's the local technical resistance. Any violation is obviously bullish. So last one, Bitcoin broke out of the channel, breakout candle. Then you can see the test of this breakout, but we went down, we went up from 85,149 up towards the local technical resistance, and you can see the market gets rejected from this zone here. and there was the rejection candle with the negative momentum. So the current situation is quite bearish, and if market wants to do something with this situation, especially bulls, they need to break back above the technical resistance, back above the trend line, back above 100 periods moving average, which is 90,088. Then the situation might be a little bit more bullish than it is right now, because now what do we see here is a bearish flag on a daily, and this is very, very bearish, especially when we go towards the extremely oversold conditions on the daily time frame chart, and then the bulls cannot break above the level of 50, the neutral level. You see, we've been talking about it before, and then they get rejected. So the situation on the Bitcoin is very bearish, but there is a chance if the bulls will get together, there is a chance that the breakout above the technical resistance, back inside of the channel, back above the 100 periods moving average, might result in another test of 94,000. Otherwise, down we go. Next target eventually 83,818. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.